This is Alan Bush with the daily financial forecast for Thursday, July 2nd. Starting out with the stock index futures, we are seeing prices higher this morning. Ironically, futures performing well, even though we did have a weaker than expected series of employment numbers this morning. In fact, non-farm payrolls coming in a little weaker than the guess. Also, we did have a very disturbing trend, I would say, in hourly earnings, only coming in unchanged. This versus the estimate of a 0.2% gain. So how can the Fed raise interest rates when wage growth is non-existent? So we continue to believe that the main trend is higher. We also continue to believe that a rather sluggish U.S. economy will force the Fed to delay a rate increase, and that is bullish for stock index futures. So the main trend on the indices still appears to be higher. Also, once we are through with the problems that we are seeing in Europe with the financial problems Greece is having with its IMF creditors, once that is either resolved or on the back burner, I think we can see a new leg up in stock index futures. Now, moving over to the foreign currencies. First of all, starting out with the dollar index, which was higher in the overnight trade but very quickly fell when the employment numbers came in overall weaker than expected, although I would have to admit that there was one bright spot. The unemployment rate did fall, but that does not carry as much weight as the other numbers, especially the non-farm payroll, which was weak. So the dollar index very much focusing on the employment numbers, which were on balance not that good. By the same token, the euro currency was lower in the overnight trade, but very quickly advanced with the weak U.S. economic data. Also, other European currencies overall tended to firm up. We had the British pound gaining, even though we did have some weaker economic numbers out of the UK. So longer term, we still feel that the dollar index will continue to work lower, and it has not performed well on bullish news that we've had, not today, but over the last couple of days. And the euro currency will probably trend higher, especially once we are finished with the IMF Greek financial problems. Now, moving over into the interest rate markets, the long end of the curve was quite a bit lower this morning, but very quickly reversing and trading higher with the 7:30 employment numbers, as we mentioned, coming in on balance rather weak. I think this is a situation where strength at the long end, the 30-year bonds, will only last for a day or so. Longer term, I think the main trend is lower for the long end of the curve. The 10 and 30-year issues, especially the 30-year. So look for new lows for the move. In fact, we did see a new low for the move last week. I think it was last Friday we saw some new lows. Some recovery on flight to quality this week, further recovery on the employment numbers. But longer term, expect lower prices for the 30-year Treasury bonds. So once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland. And good trading, everyone.